So yesterday I went ahead and gave you these notes for chart of accounts for a service business. Let's go ahead and define what chart of accounts are. And this is on page 36 of your textbook. So we're on lesson 2-2. A chart of accounts is a list of accounts used by a business. So remember, the business in our textbook is about Michael Delgado, and he sells websites to his customers. And these are all of the accounts that he has in his business. So his assets are cash, petty cash, accounts receivable, supplies, and prepaid insurance. And if you want, yesterday we talked about how assets were on the left side of the accounting equation. So anything that's on the left side is always going to be a debit or a credit. I hope you said debit because you would be correct. So let's go ahead and just label all of these as debits. Then we have liabilities and owner's equity. So because liabilities and owner's equity are on the right side of the accounting equation, what should they always be? Credits. So accounts payable is going to be a credit, and then the account for owner's equity is called capital, and that's also a credit. We haven't talked about the account drawing yet, so let's not go ahead and label it. Same thing with revenue and expenses. You haven't quite gotten there yet, so let's only stick with these ones that we've labeled so far. Okay, now go ahead and turn to the notes for this lesson. Now we're actually going to be analyzing transactions and putting them into T accounts. So one thing that we always need to keep in mind is that our debits must always equal our credits. You could also say that the left side of the equation must always equal the right side. It's just like when you're lifting weights. You don't want to add weight to your left hand and not to your right hand. You don't want to have a strong left arm but a wimpy right arm. So same thing with equations. You got to keep it balanced on the left side and the right side. So make sure that you are on page 36 of your textbook because we're going to be looking at these different transactions. The first one is on January 2nd. We received cash from owner as an investment for $2,000. So Michael Delgado is taking his own personal money and putting it into his business. Whenever we talked about this investment last chapter, we knew that an asset would have to increase because cash increased, and my owner's equity would increase as well, because if I make an investment, that affects my owner's equity. So now we're actually going to do T accounts for both of these accounts. So I know that cash is going to be affected. So I'm going to write cash, and I'm going to draw a T account for it. Then I'm going to draw a line to separate my left side of my equation from my right side of the equation. Because I know that owner's equity is on the right side, and the account that is in charge of owner's equity is capital. So since we are receiving cash, that means my cash is increasing. So I would debit cash. So I would debit cash for $2,000. And since I increased one side of the accounting equation, I have to increase the other side. So I need to increase my capital as well. But an increase on this side would be a credit. So we would credit capital for $2,000. then you can see that I have my debits equals credits because I debited for 2,000 and credited for 2,000. Okay, let's go on to the next example. On January 2nd, paid cash for supplies, $165. So this time my cash is decreasing because I paid cash. But we also gained supplies. So both of these would be on the same side of the accounting equation. So my cash is going to decrease. And so since I'm on the left side of the accounting equation, anything decreases as a credit. So I would decrease cash by $165 and increase my supplies by $165. So I still have a credit and a debit, but I'm staying on the exact same side of the accounting equation. So one asset's decreasing while the other one is increasing. All right, moving on to example 3. On January 3rd, paid cash for insurance. So this is just like the example before. My cash should be decreasing, but I'd be gaining an asset, insurance. So both of these are assets, so we're still staying on the same side of the accounting equation. Since we're paying cash for insurance, cash is decreasing. So I would decrease cash for $900. But I would be increasing insurance for $900. Oops. So since insurance is an asset, it would increase on the left side as a debit. Okay, example number 4. January 5th, bought supplies on account from Canyon Office Supplies. So on account is the key word here. So we bought supplies, but instead of paying with cash, we're charging on account. So since we have to pay somebody else, this is going to be accounts payable. So we're going to increase our supplies, which is an asset, and we're also going to increase accounts payable dash Canyon Office Supplies. So supplies would be increasing because we bought supplies, which means we have more supplies. So is supplies increased as a debit or a credit? You should have said debit because it's an asset. So I would increase supplies as a debit for $220. And then I need to increase my accounts payable. Okay, I already have one debit, so that means I need a credit. And accounts payable is a liability. So since I increased the left side of my equation, I need to increase the right side. So I'd increase accounts payable with the credit for $220. So you can see I've got one debit for $220 and one credit for $220. So I'm still in balance. All right, last example. On January 9th, we paid cash on account to Canyon Office Supplies. So my cash is going to be affected because I'm paying what I owe to Canyon Office Supplies. And then accounts payable dash Canyon Office Supplies is going to be affected. So if we're paying cash, that means my cash is decreasing. So since cash is an asset, in order to decrease it, would I debit it or credit it? You should credit it. So I would decrease cash for 100. And so since I'm decreasing the left side of my equation, I need to decrease the right side. So I am going to be debiting accounts payable because I'm taking off 100 of whatever we owe to Canyon Office Supplies. So I can, as you can see, I still have a debit for 100 and a credit for 100, so I'm still in balance. All right, go ahead and turn to your work together. Make sure you turn to page 42 to follow along in your textbook. We're given 6 different transactions, and then for each transaction you have to prepare 2 T accounts and then write the debit or credit amount in each T account. So we're going to start off on March 1st. We are working with a company called Jensen Cleaning Service, and then it lists out all of the accounts that this company has, or this business has. So on March 1st, they received cash from owner as an investment. So I know that cash is going to be affected, and my capital is going to be affected, because remember, anytime a company or a business has an investment, it always affects capital. And the name of this capital is John Jensen Capital. So I always need a debit and a credit. So we need to figure out what account is debited and what account is going to be credited. Well, cash is an asset. So if you need to, go ahead and label debit and credit on each side of this. Since cash is an asset, would it increase as a debit or a credit? Hope you said debit, because you'd be correct. So we need to debit cash for $4,000. And if you want, you could still draw the arrows, but you don't have to. So since I debited cash, that means I need to credit capital. Also, capital is on the right side of the accounting equation because it's owner's equity. So that means that if it's increasing, I would be crediting capital for $4,000. So you can tell that my debits equal credits. Okay, moving on to March 3rd. Paid cash for supplies. So I know cash is going to be affected and supplies. Okay, this is like one of those wash equations because both of these are assets. So if I paid cash for supplies, that means that my cash would be decreasing. So if cash is decreasing, I would need to credit it for $95. And since I bought new supplies, my supplies should be increasing. And since it's an asset as well, I would be debiting supplies for $95. So since I'm staying on the same side of the accounting equation, I've got a debit and a credit, but one is decreasing and one is increasing. Okay, March 4th, bought supplies on account from Supply Depot. So once again, we're buying new supplies, but we're not paying cash for it. We're charging on account. So since we owe somebody money, or the business owes somebody money, we would need an accounts payable - Supply Depot. Alright, so we bought supplies, so supplies should be increasing for 120. And since I increased the left side of my accounting equation, my assets, I need to increase the right side, my liability. Liabilities always increase as a credit because they're on the right side of the accounting equation. So I would credit it for $120. So once again, I still get a debit and a credit that equal the same amount. 2 more transactions to go. On March 6th, we paid cash for insurance. So I'd have cash and prepaid insurance. So since the company paid cash for insurance, I know that cash is going to decrease by $250, but I'm gaining an asset in insurance. So my insurance would increase for $250. And we can check that we've got one debit and one credit. So we're in balance and we're good to go. Moving on to the last one, paid cash on account to Supply Depot. Okay, the easiest way is always start with cash. It's the easiest one to determine. So I know that cash is going to be affected, and then we're paying off part of what we owe to Supply Depot. So accounts payable, Supply Depot needs to be decreased as well. So I'm going to decrease cash by $80. And I also need to decrease accounts payable. So since it's a liability, should I debit or credit it to decrease it? I should debit it because liabilities increase as a credit, which means they decrease as a debit. So now I'm in balance. I have a debit and a credit for $80. Alright, you're going to be doing the same thing on your application problem. Make sure if you get stuck to use your work together and your notes. On your application, you don't have to label debit, credit anymore. If you've got the hang of it, you also don't have to do an increase and increase with your arrows, okay? If you want, you can just write the amounts down like they did. They already did the first example for you. So just heads up, they did June 1st for you. They debited cash for $10,000 and then credited capital for $10,000. So this must have been an investment into the business. If you need to still write debit and credit on each side, you can, but you don't have to.